Well, hello traders, and welcome back to the Learn to Trade channel, and welcome to this week's webinar, right? Since tomorrow is non-farm payrolls, I am going to focus this week's webinar on that, on non-farm payrolls, what to expect, what are the expectations, the analyst forecasts, and we are going to go through last month's numbers and the different reactions or the reaction of different markets to the release, right? So let's go to the calendar, right? And let's start by looking at and we're only going to look at the U.S. non-farm payrolls, right? We're going to focus on that. Now, most traders focus on the actual number, the actual non-farm employment change, right? But what I like to focus on is the average hourly earnings month over month, the increase or decrease in those, and the unemployment rate. Why? Because I believe that it really doesn't matter if more jobs are created, if the wages decrease or keep or stay stable, right? People are not going to have enough money to buy stuff, right? So it's not, the creation of new jobs with lower average earnings does not have the same bullish impact in US equities, or if we're looking at the Canadian employment change and the Canadian hourly earnings, or the UK's, you have to look at that country's benchmark. But because we're looking at the US dollar or at the US non-farm payrolls and average hourly earnings and unemployment rate, we're going to focus on the Dow and the S&P 500, right? So let's have a look at the average hourly earnings graph. Actually, let's start by looking at the expectations, right? Last month, the average hourly earnings increased by 0.1% or 4 cents, I think. And it is expected that last month they also increased by 0.1%. Remember that these numbers are last month's numbers, right? These are November numbers. Non-farm employment change, it is expected that 500,000 new jobs were created last month, a lower number than October, right? And it is expected that the unemployment rate will decrease from 6.9% to 6.8%, right? So those are the numbers that we are working with. We're going to look at the US dollar and of course the Dow and the S&P 500. But let's look at the I think it was today that we got the unemployment claims, right? So the unemployment claims were very good. As you can see here on the calendar, they dropped from 787K or 787,000. It was expected that they would drop, right? It was expected that they would drop to 775,000, but the actual number was only 712,000, right? So that is very, very good for US equities. This is why we had that great rally on the Dow for today's signal that hit targets, actually. And if you want to be on the VIP swing trading signals, right, I'm going to leave a link below this video so you can join us, because this is how we trade. All right, so the this is the initial jobless claims, right? Now let's look at the continuing jobless claims. They have been dropping month over month, which is also good, right? And the average hourly earnings has been all over the place, increasing by 0.1%, 0.3%, staying stable, 0.1%, etc. So on the average hourly earnings side, we have nothing really concrete to move forward, but we're going to look at the job creation in the United States, right? Why don't we look at, let's open a new window and let's look at the non-farm payrolls, right? The United States non-farm payrolls. And this chart is off the charts. because of the coronavirus pandemic, right? Non-employment chart is going to look the same ever again. But this is it, right? The job creation in the United States has been dropping since June, July, August, September, October, right? And it is expected that it's going to keep on dropping. So this, I mean, the actual number, right? The actual number is going to be a little bearish for U.S. equities, okay? Now, the last non-farm payrolls were on, let's open the calendar here. Yep, on Friday the 6th, November 2020, right? So let's jump on the calendar to that date to see that release. And it's Friday the 6th to, let's call it Friday the 6th. That's all we want to do. All right, so here are the numbers, or last month's numbers, right? So we had a decrease in unemployment rate by 0.1%, but we also have had a decrease on the average hourly earnings, right? And we had a bullish number because it was higher than expected, but it was lower than last month's, right? The revised, this is the revised number. Let's have a look, and here it is, right? So let's jump here to the charts, and let's have a look at what happened, what actually happened, right? Let's go and let's have a look at the US dollar. So we're going to go to November 6th, right here. And this is the period that we are going to be focusing on, right? So non-farm payrolls are these candles right here, apparently, right? Well, as you can see, we had somewhat of a stop hunt to the daily lows, which were all the way down here. This is the DXY, of course. But when analyzing the US dollar, we focus on the DXY. This is the US dollar currency index, right? So we had a flush, right, to the daily lows to of course, stop out some very weak long positions. And then the US dollar rallied, right? This is a big rally. This is the 1 hour chart. So in 3 hours, the US dollar rallied about 0.87%. So let's focus on that for a second, and let's have a look at where we are standing right now, right? Now the US dollar has been, actually let's go and have a look at what happened before non-farm payrolls, the previous days of non-farm payrolls in November. And as you can see, the US dollar was printing negative days. These lines that you see here are the daily open. And if they're red, it's because the US dollar closed red for that day. If they're green, it means that they closed positive, or the US dollar closed positive. And right here, we have 2 consecutive red days before non-farm payrolls. And with the numbers that we just saw, the US dollar rallied, right? Now let's go and let's have a look at what's going on right here. And it's kind of the same scenario in the sense that we've, but in this case, we've had 1, 2, 3, and if the US dollar closes or the XY closes where we are right now, is going to be 4 consecutive red days for the US dollar, right? Let's go again to November 6th, and we need to also focus on where we were trading at this moment in time, right? And as you can see, this is the big area of support that that we just broke at the beginning of the week, right? Look at it. It's between the 91.80 and 92.10, right? So big area of support. Of course, that buyers were going to be placed here, and with a positive non-farm payroll employment change, given the fact that the forecast was way lower, buyers jumped in on the US dollar, right? This is the US dollar, and we're going to go again. As you can see, this is the actual zone that we were looking at earlier, And right now, we are approaching to a very big zone of support, right? Which is this one right here. This zone that I'm pointing on my chart is where buyers are going to be placed. Now, let's go back to the hourly chart so we can figure this out. Now, remember that non-farm payrolls are tomorrow, so we are forecasting on still about what 18, 15 hours left of price action. So what can happen is that we can definitely have a move lower, right? I mean, right now we are going to close negative for the day. Perhaps tomorrow when we open, we are going to continue this downtrend to that massive level of support around the 90.38, right? And if price is trading around this level during non-farm payrolls, we pay close attention to, and let's go back again to tomorrow, right? Let's pay close attention. And where are all the results? I don't know. Let's actually let's just right here. Pay close attention to a bit on expectations, right, or a bit on last month's numbers, and if the non-farm employment change comes higher, right, this is going to be bullish again for that, for equities. All right, so that's the US dollar. Let's have a look at the S&P 500, right? So this is the Dow. Let's look at the S&P 500. Well, why don't we have a look at gold too, right? Gold is a big mover during non-farm payrolls. I'm just going to delete the drawings and the indicators and go to the hourly chart, right? And we're going to go again to November 6th to see what happened, right? Big flush in gold, right? Big flush in gold on that non-farm payrolls Friday, right? A big flush. Gold decreased in value from high to low about 5.90%. So the opportunity will be in this market, in my opinion, right? This would be a good time to pay close attention to a rally in the US dollar to short gold. Now let's go again to today's December. We're going to, did we go to November? Yes, but this is the hourly. Actually, I don't know. Hold on. November 6th. No, yeah. I mean, December 6th, November 6th, November 6th. Right. This is what we're looking at. Well, in any case, let's have a look at where gold might be trading tomorrow. Right. I do have some longs going on right now. And I have my targets right here, right? This is a very big zone of support in gold, right? Of course, that there's a lot of time left for non-farm payrolls, so I'm going to pay close attention to what happens. But in any case, this is where I'm going to be taking profits, right? And the reason is because it's NFP Friday, right? And if numbers beat, well, we're probably going to have a gold flush. And not only that, but also here is where heavy sellers are going to be placed, right? It's that's not rocket science. This is just the retest of a massive level that we broke on November 23rd, right? So pay close attention to the 1858 level in gold for some short opportunities. All right. Now this is just in case the US dollar rallies. All right. Now let's have a look at the Dow. I'm going to leave this this chart as is, just because I'm still on that trade and I am managing it. But I'll just open a new one. Let's have a look at the Dow Jones Industrial Average. This is the CFD, right, on the Dow. Now, we are in a Dow rally, right? And let's go and see what happened that November 6th. Right here, non-farm payrolls hit. This is a 3-hour chart. Non-farm payrolls hit, and bam, big rally in equities. Of course, the newly created jobs are going to be bullish for equities, right? That is not, again, something that well, this is I mean, this is common sense, right? So this is going to be quite difficult because we are closing to all-time highs, right? Well, there is absolutely no level to trade from. But let's go to the hourly chart, actually. Let's go to the hourly. Let's have a look at that. What's going on, right? So we broke with this flag today, right? This is where we took that buy in the Dow, and we had our targets here. Very nice trade, if you ask me. And well, if you want to be part of the VIP channel, again, just hit the link below this video. But in any case, right, we need to wait to see what happens. And remember that the market is about to close. We are going to close positive, and there's 3 positive days in a row on the Dow. So we might get a move to the downside. Actually, let's go to a lower time frame to pinpoint the correct zones. Actually, let me just use the correct template, right? That's it. So we are trapped inside of this range at the moment, right? It's pretty plausible that we might flush to the bottom of that range, which would be a retest of these highs, even though we already retested and bounced from it. But there's 2 possibilities, 2 scenarios, right? And these are the 2 scenarios that I foresee. The first one is a dip to this level, and if the Dow is trading at these levels and we have positive job numbers, well, this is going to be an excellent zone to buy with a great risk to reward, right? But if the Dow actually continues to rally, it's pretty plausible that it's going to be retesting the previous broken level, which are these highs, right? And in this case, what's going to happen, or what we are going to be looking for, is a buy right here to all-time highs. This will be our targets, right? And now we're talking about a 0.53% move from that scenario, or a 0.9% move from the first scenario. So that's the Dow. Now let's have a look at the S&P 500 again on CFDs. US 500, yep, this one right here. And let's go again and let's see what happened last month. Well, here it is, November 6th. Right here, we had a smaller rally on the S&P 500. Again, the S&P 500 is much less volatile than the Dow, because in the S&P 500 we have 500 companies, and on the Dow we only have 30. So we did have a rally. So the best opportunity that we are looking at is on the Dow. Finally, let's have a look at the Nasdaq. Only 100 companies in the Nasdaq, and let's see what happened on November 6th. Boom. And November 6th, actually the Nasdaq continued to decrease, right? Not much to look at here on the Nasdaq either. So the actual opportunity is on the Dow Jones. Again, let's go back to November 6th. And as you can see, actually this big rally was on November 9th. Right, on November 9th. So again, a smaller rally here. And then we had that big rally. I think on vaccine news or something like that. So look at that. The Dow is now breaking with the top of the range. So if we close above on new daily highs, yeah, it's pretty possible that we're going to continue rallying. Okay. Now let's have a look at what's going on with gold at the moment. Gold is pretty stable, but the DXY, or the US dollar, is now continuing its move to the downside after a relief rally, right? So heads up to that, and be careful if you're not used to trading the news. Do not front run this. Do not front run big announcement or big news releases. Front running means putting on trades right before the news hit the wires, expecting that either the numbers are going to beat expectations, or they're going to be bad numbers, right? Because you don't know what the numbers are going to be when the release comes out. And I mean, that's just one way to gamble, right? And this is not, I mean, trading is not gambling. You have casinos for that. This is a very precise way to manage your risk and make money out of that, right? So non-farm payrolls is going to be a big event, and you already have the zones on gold and the Dow for those releases. All right, so big event tomorrow. And of course, if you have trades open like I do, remember to manage them before the actual non-farm payrolls, because also, I mean, if you're in profits and the numbers come adverse to your actual position, I mean, it's a pity that you're going to erase all those gains, because making money is in the market. It's not an easy thing to do, but it can be done if you manage your trades correctly. Do not enter in wishful thinking or wishful trading. Trade what you see. Take profits, and join the premium or join the VIP signals group and trade with us. Again, the link is below this video, and I will be with you on the next one. Thank you.